In today's episode, we're going to be talking about this Bitcoin cheat sheet where we'll be talking about the pre-halving year of 2019 and comparing that with also the pre-halving year of 2023. We'll be distinguishing three particular phases: pre-halving period, post-halving resistance, and post-halving parabola, in an effort to understand better what to expect from Bitcoin going into the late 2023 and beyond. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this, and let's dive right into it. So first and foremost, we should probably focus on the fact that Bitcoin is in a range from this range high resistance to the range low support here, and that we see an analogous situation to the range low support here in 2023 of around 16k to the range high of 3600 being the range high resistance. So we have these two ranges across cycles, and one of the key takeaways here is to note that we never really actually revisit the range low support in that macro range. So if 2019 were to repeat, we wouldn't actually drop into 16k once again. However, what we're seeing here is that in 2019, in the pre-halving period, so the halvings being delineated by these blue vertical lines here, at best we could get a revisit of the higher low. And of course, the longer it takes, the more this higher low climbs over time, right? Because this is a dynamic support and it's going to represent a higher and higher price as time passes. So if Bitcoin were to suddenly crash into the higher low here, we'd probably see this at around maybe 19k or so. But if Bitcoin crashes closer to the halving, then we'd be around 22k in fact. This high low would be around 22k. And of course, we have to also talk about this potential downside wick. Could we see a downside wick below the higher low? That would be absolute bargain buying territory. But the thing to talk about here is that we're probably going to see a crash in this pre-halving period. So this is the orange box here. The pre-halving period is probably going to enable us that final bargain buying opportunity for price, and we saw that in a local top in 2019, then that downtrend, extended downtrend, the March 2022 crash, the 2020 crash, apologies, into the higher low support, and then going into the halving, we revisit and go into the post-halving resistance, and that post-halving resistance is essentially the range high resistance here. The range high resistance of the macro range. So essentially, if we were to just map these points and bring them across like this, then a potential crash into the higher low could be on the cards late this year, maybe early 2024, but then we'd be able to find support at that higher low and then rally into the halving. And just after the halving, we'd probably see a post-halving resistance period like this, where we struggle to break beyond 31k once again in a very similar vein to what we're seeing right now, but only after the halving period would we see 31k really break, and then we'd see fantastic post-halving parabolic continuation, and that's where we're going to really enter the most exponential and parabolic and emotional stages of the bull market, where we see lots of over-exuberance, euphoria, FOMO, the fear of missing out, and overconfidence in the market, over-optimism as well, and that's something we can expect in the months after the halving. So that's this Bitcoin cheat sheet in a nutshell. But one of the other things to talk about is that we might be in a range here, just like in 2019, but at the same time, we might also be forming a triangular market structure within this range. And this is an interesting thing to bear in mind, because we're probably going to see coiling into the apex of this triangular market structure going into the halving. And so if history is any indication here, then maybe we could see some sort of breakout prior to the halving into some sort of continuation, maybe a retracement around the halving. Really does depend. It really depends on if this lower high continues to reject price, because if it does, then we'd see dropping into the bottom of this triangle, coiling into the apex of this market structure. And of course, price compression such as this, as we coil into the apex of the structure, price compression precedes volatility. And so that volatility, as long as we consolidate here, then we'd probably see a breakout from this triangular market structure. So we know that there's a macro range. We know that there is a higher low to really be paying attention to should we indeed crash from here. One of the other things to really take into account is that historically we've been seeing the same fractal really play out over time. Not only in 2019, so in the pre-halving year, which is probably most analogous to what we're seeing in this pre-halving year of 2023, but we've also seen this fractal play out in 2021, which was a different phase in the market cycle, of course. But this is still a bearish pattern, and bearish patterns just showcase to us market psychology, which this market psychology tends to play out regardless whether it's a bear market or a bull market. In any case, the thing to note about this bearish fractal is that we see a double top, right? So an M-shaped formation, that's essentially this step in the fractal. So we've seen a double top form here for Bitcoin as well. But then we see the third lower high take place. So in 2021, we can see this best. Here in 2019, we also see that this is a lower high, so a relief rally. And we might be seeing a relief rally right now. And if this relief rally really does culminate at the lower high resistance here, then we could see a drop back into 26K and then lose 26K by turning it into a resistance afterwards. So essentially, after we see this lower high form, drop below the analogous 26K region, turn it into a new resistance before seeing further downside. And this is exactly what happened here. After the relief rally, we drop below the analogous 26K region and then recover to turn it into resistance before downside continuation. So that's what we could see, a relief rally going into the end of September maybe, even beyond, and then dropping below here and turning 26K into a new resistance before dropping a bit lower. So that's essentially the bearish fractal that's going to enable this sort of price action and downside within the pre-halving period, downside into lower areas of the triangle, but also the macro range. And one of the things to note here is that in 2019, the 200-week moving average was a fantastic reference point for price because anything below there was a bargain buying opportunity. In March 2020, that's the best bargain buying opportunity we had, and it was very brief, only 2 weeks long really. It was very brief, and the difference here is that we saw multiple months of bargain buying prices for Bitcoin, and in fact we are seeing bargain buying prices, technically speaking, according to this indicator, even now. But of course, we could still see further downside from here. So the bargain buying zone really is quite wide. And you can see that right over here. But generally speaking, anything below the 200-week moving average is a bargain buying opportunity. And even just seeing what happened to price afterwards with a rally to 31K, buying anywhere below the 200-week moving average would have been a very good investment opportunity. So we are still in bargain buying territory. We could still drop a little bit lower, but in the long term, if we're thinking about the pre-halving period right over here, we could see a bit more downside as per the bearish fractal, and in preparation for what is really truly to come in 2024 and 2025, the parabolic rally. And so if we just think about this 200-week moving average offering a bargain buying opportunity, the lower we go inside this range, the closer we get to this higher low here, this is all just a fantastic opportunity to position ourselves for what's to come in the future, the post-halving parabolic rally, and that's something really to get excited about. And how does this cheat sheet tie into the 4-year cycle? You can check out the 4-year cycle video in the top right hand corner, subscribe to the channel for more videos like this in the future, and I'll speak to you in that one. Like the video, of course, if you enjoy these videos. Speak to you soon.